So, things are getting serious whenever you start to wonder, is my job in jeopardy? Okay. Because in reality, think about it, ChatGPT, which is artificial software, right? Or artificial intelligence, AI, in a sense, I wondered, I've been doing this whole finance thing for like almost like a decade now. And I've been wondering, I've read so many books to be able to acquire the knowledge I have today, but could ChatGPT actually answer basic financial questions better than I actually could? Or could it actually at least try to keep up with me? By the way, it's not like I'm an expert per se, but almost a decade of experience, almost 200 plus books, almost 1,000 more videos on YouTube. If I'm not an expert, I'm pretty close to being there, right? But the whole point is, I wanted to ask ChatGPT some basic financial questions. For example, how to save a lot of money, what to invest your money in for retirement, how to make sure you never run out of money when it comes to retirement. And I wanted to see exactly how ChatGPT actually answered. Now, not just that, I wanted to take it even a bit further. I wanted myself to go ahead and answer those questions first before I had ChatGPT answer them to see exactly how my answers compare to ChatGPT and which answers are actually better, or even if they're close. Now, my understanding is a very simple one. This software grabs all the information out there and it kind of just compiles it and gives you that answer. Now, that basically means, okay, there's a lot of good information out there, so it could give you reasonable good information. But the point is, all right, I always believe that if you don't understand something, you don't know what you're getting yourself into, it could put you at risk, because just listening to an AI or even a person tell you something without having conviction to why they're telling you that can be very difficult when mistakes actually come out. Basically saying, all right, I tell you invest in this, but you don't understand why I'm telling you that. You don't understand what that investment is. That is still a very stupid decision, no matter who tells you it, because in reality, you don't understand it yourself. And the number one rule of investing is basically don't lose money. But number two is make sure whatever you invest your money in is into things you actually fully comprehend. Not you comprehend the whole thing, but you got to comprehend it at a certain level, okay? That's the whole idea. Now, here's the first question I try to go ahead and ask ChatGPT, and here was actually my response before I tell you how ChatGPT actually responded. My question was, okay, what are 3 ways to save a lot of money? Now, obviously, I'm asking this question because in reality, the only way to actually build wealth is going to be to control the money you have right now and to actually try to utilize it to actually build some foundation. That usually comes via saving. Now, to do this, you need to have a budget. That was my first part. You also need to go ahead and cut your expenses. That was my second part. And number 3, I said, hey, if you're doing all these 2 things, if you have extra time, go ahead, earn some more money, and that gives you more money to actually save. That was legitimately my answer. Now I'm gonna ask Paul, my editor, go to the document where I basically put the scripts for these videos, screenshot that, and put it right here, big, fat, so everyone can screenshot it and see exactly, that's exactly what I said before ChatGPT actually answered. Now here was ChatGPT's response, which is actually pretty insane, all right? So here it is, guys, all right? 3 ways to save a lot of money. I'm typing, here are 3 ways to save a lot of money. Create a budget and stick to it. One of the most effective ways to save money is to create a budget that outlines your income and expenses each month. This will help you identify areas where you can cut back on your expenses and increase your savings. Make sure to track your spending and adjust your budget as necessary. Cut back on unnecessary expenses. Take a close look at your monthly expenses and identify areas where you can cut back. This might mean cancel subscriptions you don't use, buying generic brands instead of name brands, or cooking at home instead of eating out. Small changes can add up to big savings over time. Automate your savings. Set up automatic transfers from your checking accounts to your savings accounts each month. This way you won't have to remember to transfer money and you'll be less likely to spend it. Start with a small amount and gradually increase it. Hold up, and gradually increase it, okay? Now, this is basically ChatGPT's response, all right? Word for word. Now, if you watch my channel and I go deep and specific into ways to save money, is exactly what I would say. So this right here is basically a whopping pass, all right? It even did it better than I could, because in reality, I basically said have a budget. It said that first. Cut things out you don't need. It said that second, but I didn't mention automate everything. Although I have in the past, I just said, hey, if you get some more jobs, you can basically save more money overall. Now, it's actually pretty good. It got specific, it stuck to the topic, and it did great. Now, let's go to question number 2, which I actually asked ChatGPT, and I said basically what to invest your money into when it comes to retirement. Now, my entire answer was a little bit more descriptive because I said, well, if ChatGPT is going to be answering very thoroughly, how about I answer a little bit more thorough? This way, we can compare exactly what it's going to say versus what I'm going to say. So here's what I said, okay? I basically said, retirement savings are best if you're not involved in high risk assets, basically, that don't require a lot of work and also don't cost you a lot of money via management fees. The best investments are going to be personal home because that lowers your cost of living. Number 2 in the stock market is going to be the S&P 500 or the total stock money, or the total stock market, VTI, because the idea is it's fully diversified. You get the overall output of the US market, which is actually great. Now, the third part is basically once you get to a good amount in your investments, you could always just go ahead and basically invest into the total bond market, okay? Because at that point, you'll need money for cash. You know, you want just like more stability. So at that point, if you have a lot of money, you could convert some of it into cash to have more stability. All those stocks tend to outperform bonds 100% of the time in the long term. Now, it's also important to make it a habit to invest the same amount of money per month to dollar cost average. I recommend you invest 10 to 20% of your money every time you get paid. This way, you buy at the average price and you don't have to worry about time in the market. That was my advice, okay? But when I went ahead and I input that question into ChatGPT, the answer I got was a little bit more generic in a sense. And here was the answer, all right? For retirement. All right, let's see what it says.
The best investments for retirement depend on your individual financial goals, risk tolerance, and timeline. However, here are some general investment options that could be suitable for retirement. 1. Stocks. Stocks have the potential to offer high returns over the long term, but they can be volatile in the short term. Investing in a diversified portfolio of stocks through mutual funds or exchange-traded funds (ETFs) can help minimize risk. 2. Bonds. Bonds are generally considered less risky than stocks, and they can provide a steady stream of income in the form of interest payments. However, the potential for returns is generally lower than stocks. 3. Real estate. Real estate can provide a steady stream of rental income and the potential for capital appreciation. Real estate investment trusts (REITs) allow investors to invest in a diversified portfolio of properties without directly owning them. 4. Annuities. An annuity is a contract between an investor and an insurance company that provides a guaranteed regular income stream in exchange for an upfront payment or a series of payments over time.
Nice.
5. Retirement accounts. Contributing to a 401k, IRA, or other retirement account can provide tax benefits and a diversified mix of investments. It's important to note that there is no...
I'm going to pause it right there, okay? So one thing I noticed is, okay, ChatGPT is very, like, formulaic, okay, but it's not like big picture blueprint type thing. So these are not like terrible answers because it's basically just telling you like, hey, here are some options of things you can actually buy or invest your money into when it comes to retirement. That's the idea. But it doesn't really give you a blueprint for things to consider when you actually consider retirement. Like, for example, like, okay, pay off your debt, have an emergency account, because those are all parts of retirement, okay? Then you're investing. It does mention ETFs, but it did not go into detail, for example, into what to actually invest your money into. And on top of that, when it comes to real estate, it's not just real estate for rental income, but it's also real estate for like lowering your cost of living, was also like a big deal. Annuities, I didn't even think about like putting that out there, because in reality, just investing your money gets you a higher return overall, so that's more than enough. But it's like, it gives you like answers, but it doesn't give you a blueprint. It just gives you things, but no blueprint to actually put this whole thing into. Now, when I got more specific with ChatGPT and I actually asked it, for example, some specific investments to actually put your money into, it got specific to the point where it started to suggest stocks like Microsoft, Johnson & Johnson, and in reality, Procter & Gamble, Visa, Vanguard Total Stock Market like Fund. But overall, that is actually pretty stupid and dangerous, and here's why. Because when it comes to retirement, when you invest into individual stocks and you do it just based on some advice you got from the internet, still the internet, right? The answer is it's terrible, because when you invest into individual stocks, you should be able to calculate the intrinsic value of that stock. And if you can't do that, if you can't basically calculate exactly what the net present value of this investment is actually worth on a per share basis, The answer is you should have no business at all investing into individual stocks. So the best thing to do is just investing, for example, into mutual funds, or for example, index funds and so on. That is the idea. So again, I see ChatGPT giving you generic information, but no real blueprint and no real understanding of how to put this whole thing together to actually help you out with retirement. Maybe I asked the question wrong, and that's the problem, but overall, I did not like this response whatsoever. Now, number 3 was basically how to never run out of money when it comes to your retirement strategy. Now, here's what I said, okay? I said, in order to make sure you don't run out of money via the stock market, the best strategy is going to take out less than you actually make every single year. So you make 10%, take out less. The general rule is around 4%. So I recommend actually 3 to 4%. Basically saying, if you have $100 in your account, take out $3 to $4 every single month, every single year. This way, if you're making 10, you leave in $6 to $7 in the account, which allow the account to keep growing and growing and growing. And this way you don't run out of money. It's basically called the 4% rule. On top of that, you could also keep investing over time. Although, and also, here's what I said, okay? While you still continue to invest indefinitely until you have no income. That was my advice. Now, ChatGPT basically said, diversify your investments. That's actually pretty good. Invest for the long term. That's actually pretty great. Invest regularly, dollar cost average, which is fine, and avoid emotional investing. And lastly, consider working with a financial advisor, and that's whom, because in reality, whenever you involve financial advisors, you involve management fees, which are really unnecessary if you know exactly what you're doing. So overall, do I recommend you go ahead and hire ChatGPT as your financial advisor? The answer is no, absolutely not. Do I recommend you use it as a guide? Yeah, potentially, okay? Now, I would recommend ChatGPT to actually give you like a layout of things, but you gotta go ahead and go even deeper into each individual thing to actually draw a blueprint and a way to actually do it the right way. That is my advice. So ChatGPT, solid, good advice, but it's still missing good financial information, because financial information is nothing. It's just data without planning. That's the idea. But guys, thanks for watching, and comment down below what are some questions you've asked ChatGPT so far and how has it helped you. I know people in college having this thing write their essays and do their work for them. Thanks for watching. As always, like, subscribe, hit the bell so you get notified. Peace.